Alright, you guys, so we're gonna go over what is one of the main things that I look at in the market, which I think you should learn. Like the first things before getting into levels, getting into who's buying what or what companies are really good, is learning the candlesticks. So there's a mistake that people don't wait for and actually don't look at because they have all these indicators up in their chart and all these levels. But you first have to realize the candlesticks, basically how to read it. You need to know how to read this candle, and this is what actually is going to help you with the whole market overall. Doesn't matter what time frame, what chart, what ticker, anything. Doesn't matter what you're doing. But if you do not know this thing here, which I'm showing you guys, you won't be able to even trade. Like it'll be hard for you to trade and actually have patience. So I literally just use this. So you want to be able to find the candles, this candle. You want to know where it closes, where it opens, and remember how this works. So look how the green candle, right? It opens at the bottom and it closes on top. To make it more easier is by just looking at the numbers. Basically here there's numbers, right? 180, 190 to 210. So if you see a green bar when the market's open, it starts off like this. Green or red, it doesn't matter. So let's say this is 186, 185. Let's put two levels. Actually, I'm gonna put one level here and one level there. 180, 187 and 178. So usually a candle, what it does, it opens up. Like let's say we're bullish, it's gonna open up at the bottom and try to go up, right? Because it increases, and I know you guys seen this, where it just starts moving up and then it closes there. You change the color, it'll be green, right? It's gonna do something like this. So the whole point of the time frame that you use, 5 minute, 1 hour, 3 hour, whatever's, 1 minute, 2 seconds, 3 seconds, 20 minutes, I don't care what time frame you guys use, but at the end of the day, you want to wait for this candle to stop moving and actually close out the price. So let's say even if this is the 1 minute and it closes here at 197.90, that means that what? It closed at this level right there all the way to 209.34. That means it broke above your 187 and now it's at 209. That means that the price was settled there at 209, right? Remember, it opens at the bottom, so it does this, opens here at the bottom and then moves around to close. So obviously if it closes backwards, is a red candle, right? It'll open at top, so it'll open right here on top and it'll go like this. So it'll be green up and it'll be red when it goes down. So let's say it closes this and there's a red candle. So guess what? It closed below. So that means this closed right here. This will be the price that it closed, right? It's a closed candle below 178. So it's closed. Candle was closed here. Super simple. Closed. Let me make another one that says open. Open, I'll put it green. Actually closed, my bad, sorry. But closed. On top, closed at the bottom, right? So a green candle closes at the bottom. And a red candle closes at the bottom. And the green candle closes at top. So this one is red, but it didn't close on top. It closed at the it closed at the top, right? So there you go. Sorry about that, I'm getting confused. So this one closed at top and the other one closes at the bottom when it's like this. Or even if it's the same, the whole point is that the color of the candle. This one closes on top. If it's red, closes at the bottom. So that one, if it's red, it closed at what? 197, below 187 or 195 or whatever. Let's switch it. It closed right at that line, 187.50. But if it's green, it closed on top. So what the difference is that if you know your candles, right? Let's say if you didn't know your candles here, you should be like, oh shit, it closed on top, right? But you have a candle here going up and it's like this, then you're fine. All you want to do is either wait for a pullback for it to hold that 197 and come back up, right? If not, depending how the candle looks, that's when you have to do your research. I'm not gonna go over this. The next candle will be green. Why would it be green? Because it's so far bullish, and then you can see it going up, right? From this candle, it showed that it closed above it. So now the next candle, what happens is that a lot of people, while this is moving, they don't wait for it to close. They're doing this, and then let's say you're in the 5 minute candle, you usually want 5 minutes to pass by. And this 5 minute candle doesn't pass by. Let's say it's doing this, and it's 3 minutes in and it's still moving. You don't know what price is gonna close. It could come back like this and close at the bottom, right? But the thing is that we don't know that until the candle has closed in the 5 minutes, because this could be like this in 2 minutes, but since you're looking at the 5 minute candle, you need 3 more minutes left, right, for the time to close. But this, you want it to stay there, and there you go, boom. Once it's settled and the 5 minutes have passed, you will know the next price action, and you will say, okay, the next one should be green, right? The next one could do whatever it wants, but the point is that you entered at the close. So your entry will be at 232, whatever it closed, 232.22, right? You wanted to hold 197 in order to keep going up, just to create a lower high. Just to create this, either do this, and you get in, but so far, it could still go up and keep going up and higher, and then you still want it to keep holding below that candle. That's the whole point of blowing your candles, where it opens and where it closes. So let's say it closes here and you enter, your stop loss will be below this candle. Literally, your stop loss will be right there, below that candle, because that means the price closed below 187, meaning that it's getting weaker. Alright, so that means your stop loss will be here. Depending on how far your contract is or everything, that's where everything works out. You could have it halfway of the candle, or you could have it here. The reason why I have it below the candle, it's because sometimes the next candle that comes out, it could probably do this, right? It could try to do this, go halfway, and then go back up. So what happens if it does this in the 5 minutes? It's gonna create a doji, right? So it'll hit your stop. It's gonna hit it no matter what. That's the thing that sucks. So this will probably be like, I don't know why it's not letting me do it, but this will probably end up as a doji, and that doji will mess you up when you're trading, because if it's like this and your stop loss is halfway, guess what's gonna happen? It's gonna hit it, right? So you have it below, you're gonna have a good set amount of stop loss, and then after that, the next candle will probably just do this, right? It's gonna go right here halfway, come back down, and you know that's to happen, that it comes down, it does a red one, and then it comes close to your stop, it does another red one here. So that means from there on out, maybe it'll do a green one, and then it'll just keep going. And I know you guys have seen this a lot of times. It does this, let me change the colors right now, and then it breaks. So then what would you do if this happens, right? This one's red and then the next one becomes green. Obviously I'm not putting the wicks right now, but I want you guys to learn the candles. Why is it good to learn the candle stop losses? So let's say you would have entered at this candle, because this candle, you saw that it passed this one, right? So that means it's stronger, and then this is a red candle, meaning they're sellers, right? So if these are sellers, this is a seller's candle. They're selling from 238, right? You get the price right here. They're selling it from 237, 238 to 213. These are where the sellers are at. So imagine this candle was like this. So what happened to this candle? It closed above where the sellers once were, meaning it's still bullish. So you could enter here and expect the other one green, which it does happen. Most of the time it does this, right? So guess what? If you enter here because it broke above your level and it actually closed in between these doji, you could see the action here that is closing. This is closing higher than the other one. This is closing higher where sellers were. So guess what? Even if you entered here, either you take profits where it closed there, because this is where it closed, you'll take profits here and leave a runner, and the runner will just go back in, or you could re-enter at this candle, right? You have to wait. But if it goes below this big candle where the buyers were at, then it could keep going down, right? So that's why you need to know your candles. It's just super simple. This is something you need to actually start learning before you learn your levels. The levels are the easiest thing you could do. But if you don't know where the candle opens, when that candle closes, how sellers are coming in and out, then it's not gonna work for you. So for example, right now it's like, if you enter here, you could exit there or put your stop loss here as fast as you want. and you will break even, right? Because it closed here, and this will be your entry. Where it closed will be your entry, and then you have your stop loss. Obviously, if you entered here, it's going to be backwards, right? You will enter there at the close because of green candle, because we're bullish. And then if it goes up, all you really got to do is just set up your stop loss here. And you just keep following it and maybe trim there. But your entry was all the way where the bottom was. 171 to 232, just saying. Don't look at the whatever price is. I'm just showing you by candles. So now, if you would, let's say, this candle does come down and your runner gets stopped out, but then it starts going up, you would re-enter at this section here. Once it passes that level and it passes this candle, because then the next one could be the same thing. So you will enter there again on your stop loss here. But that's the thing. This is already creating a higher high if it started from here and a higher low. So you want to go with the trend. So this already did what we wanted. We saw what we got it. We want it. We want this to happen, the setup, and it'll be going higher to create a higher high, right? Higher high here. It'll probably go higher, higher low, and then wherever it does the low again, wherever you see that it's trying to reject another level, probably all the way over here, right? But the thing is that you got your entry where you want it and you hold it. The next candle could do whatever it wants as long as it does this, right? Maybe another green one, or maybe it stops out like that. Your stop loss will be below here, and maybe you'll get another green one like this. But you have to wait for that time frame that you're looking at to have its closure. Like this, it could be red here, and you've seen that happen also, that it stays right in the middle, and then it goes to a green one. This is where your candles, learning your candles have to learn. There's a bullish engulfing. It engulfs this one, if it's especially like this. Engulfs this red one, closed above where sellers were. So you will get another green one, and this is where you hold. You start holding, and it'll start taking your position even higher, and you will not start trimming until you start seeing a rejection wick, which that's what you also have to learn. See, if it closes above it like this, that means there's a lot of sellers. So if it gets to your level and you have a wick showing rejection right there, something like this, that sellers are coming in now, the wick is basically showing you what's going on. So even though this is green candle and this wick is showing you this, you can still get another green one. Why? Because it's closing above the previous candle. Remember, it closed right there, right? It closed right there. This candle closed here, this one closed there. So this one closed at this price, 302, and this one closed above it. So it's still bullish. As long as you don't see a red one coming in aggressively. So if the next one will be something like this, and then you see that it turned red, and this is right there showing you sellers bringing it down, that's what's gonna bring the whole price down, and you could exit your position once it hits your target. And the thing is that the candles creates wicks. So like example, I already showed you this, right? So let's say this will be a red one, right? It starts off red because you're in a downtrend now, right? This will be a little small downtrend, micro downtrend right here, because it's trying to drop. So this one will open up red like this. Why? Because it's below the closure. Remember, this one closed at the bottom like that. Closed at the bottom at 291. Closed where it opened, where the last green candle opened. That means we could get another red one, and the other red one will come out. So how are wicks created? Wicks are created when the price is this. So let's say this candle's there, starts off here, and it drops, and then you see that there's this section is where a big amount of buyers were because it's candle, and let's say around this level, you start seeing this. It goes down, but it doesn't close, right? Then it goes up, it goes up, it goes up. So when it does this, and it closes, it creates a wick. This is basically covered. So buyers come in and buyers are pushing the price up, and it creates a hammer or whatever pattern you guys know, and it's showing you that it's holding this level at 267. So because this happens, maybe the next one will be a little bit more patient. It'll probably consolidate or maybe give you a green one, and you want to wait for price action to tell you what, because this one could come again and do this, and if it closes below where this candle closed, which is right there, at 289 right above the wick. And if this one you see that it's there and it's showing you a little small amount of buyers, you would just wait because this level is being held. But if you see that it did this and it closed like this, you could get in. Why? Because this candle closed and you waited patiently below that 267, which now could continue back to 232 and keep going lower, right? So now, same thing that I said, this is the power candle, so you need to know your candles. So now here on this QQQ weekly, right, this is a weekly. The candle that looks more strong is this green one, so it's like this, right? Buyers are all in that section. Buyers are here. Started from his buyers are right there at 265, and this candle closed above 288.91. So now look, if you had this weekly candle, you wanted it to break above and hold 288.23 in order to keep going up, which you see another level here. You see that? You start making your levels, and this helps you out with the rest. These are your weekly levels, and then you start finding your 4-hour levels, right? It's just, I'm gonna just show you guys something real quick. You see your 4-hour levels, and same thing here. You have another 4-hour level here. This will be on the next lesson, but I'm just showing you guys an example. Another 4-hour level, and then another one down here. So you guys know, you guys can color these differently. If you want to see what's the weekly, I'm gonna put them white. So you know, between this candle 264 and 288, that was a weekly candle, remember? On the bigger time frame, you see this. So you could expect the bounce still at 272, 267, 265.01, and 279, because it's just inside of it. In the weekly you saw this, but in the 4-hour, look what it's doing. So look what happens. You did that level on the 4-hour, and it bounces back up. It's holding 279. It broke 279 and went with where? To 272. And the same thing happens with candles. Look what happened with this one. It closed right here, right? Like I said, this green candle closed there, right? And then now the other one closed below this candle all the way here. So you could expect a red candle next, right? So this was after hours, but look what happened. The next candle was red when the market opened. Closed below it, next candle still red. Closed below it, next candle still red. Closed below it, and this one stayed. The last candle that showed up closed in the middle, right there, right? Closed, but guess what? This has to pass 275.52 in order to kind of come back up to 279. So my levels, since this is barely today Sunday, my levels to get bullish will be 275.43. So 275.60 to go up back to maybe 279. But the thing is that we're looking at the trend. We still want to create our lower low and higher low for it to do this, right? To come back down. But once you know that it breaks this power candle on this weekly, you could break down and just flush. That's why it's good to use multi-time frame and lower your candles. So far, this could still come back and open at 275.60 and drop, and then probably hold 273. But once it holds this big level at the 4-hour, because you divided that weekly candle into bigger time frame but smaller, right? So this is a weekly candle, but we're dividing it into 4 pieces in the bigger time frame. So you could wait either that, but if you go to the 5-minute or 1 minute, you will start seeing it all different, right? You see that? This is how it looks, and you start making levels all over the place. That's why I like using the 4-hour levels to show me what's going on, and the weekly. So you see, so far I know that, okay, it closed below the weekly 288.91. We could go down to 280. Close below it. Went below this level. The same thing. Come back down to 277. There you goes your 277. Now what? Below 272, we go back down to 265, which that was our weekly. I don't want to make this lesson so long, but there you go. That was a 20-minute lesson. Basically, you learn your candles. Literally. Everything's online. I'm just showing you how to read it. There's a candle. The rest is, I'll show you guys in the next lesson. The candle that I like using, the candles that I use. But you guys can look them up online. The hammers, the double tops, double bottoms, evening star. Like use those patterns. But remember to wait for the candle to close, because this price, when the candle's moving like this, it's an auction. You want the auction to finish. So if this is a 5-minute candle, it'll take 5 minutes per candle, right? So it'll be like a 15-minute trade here. 5, 10, 15, 20, 30, 35, 40 minutes. Let's say this was an hour candle. Obviously you're gonna swing. If you enter here 1 hour, 2 hours, 3 hours, 4, 5, 6, 7, and you stand the 1 hour daily, 1 day, 2 days, 3 days, 4 days, weekly, 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7. See? 1 minute, 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes, 6, 7, 8. 8 minutes, 30 seconds, 30 seconds, 30 seconds. That's 1 minute in total. Plus 2 more, that's 2 minutes. Plus 3 more, that's fucking 2 minutes and 30 seconds. 3 minutes and 30. So this whole move, depending on your time frame, is what's gonna tell you what everything is. So from here to here, on the 30 seconds, is only 3 minutes and 15 minutes. So 50 seconds. 5 minutes, 5, 10, 15, 20, 25, 30, 35. 30 minutes for this whole move. 1 hour takes you a whole day to make this whole move. 4 hours would take you 3 days to make this whole move. 1 week would take you a month to make this whole move. You see that? Monthly candles will take you almost a whole year to make this whole move. 30. So that's the whole point. Waiting for the candle to close, and you'll be able to predict what the next candle is going to be. So just by showing you this, I know that this weekly candle, since it's a weekly on the time frame, it closed above here. We could still hit 265 or maybe 259 in the week out, which is in 4 days, because next week is really short. Today's December 12th, 18. On the 23rd, the market is the last day because Christmas Eve is closed. Christmas pre-Eve or whatever they call it. So there you go, you guys. Practice that. And the only way you could actually practice this a more patient way is by getting a swing contract and learning the bigger time frame to see the candles. Once you start seeing the candles and you get proven wrong that you were wrong the whole time, you get proven right that you were wrong the whole time because you don't wait for the candle closure, your confidence will get boosted so high that you won't not even trade when you see stupid price action, and you won't know it. Okay, so that's the whole thing of this. Like, that's why I kind of choose the longer contracts for now, because I learned how to wait for the candle to close. A lot of people don't do that. So if you guys learn how to wait for the candle to close by using a longer contract and actually looking at the price, not looking at how much money you lose, because if you do get a 3-week contract on a day trade, you'll be able to see the candle move like this on the 5 minute and you won't lose nothing. Maybe you'll see this, and then when you see this red one, you want to get out because you're losing like 30-40 bucks on like a heavy contract on a swing on a weekly contract. But if you get a 3 weeks out contract, you only lose like $2 instead of losing 30%. You lose like 2% because you're following the trade. You're following the candle. Learn this first. Get your brain to recognize these patterns. Recognize your patience. Practice it, and that's how you practice psychology and trading. Starting off slow, and then from there increase it. Once you know that your mind is becoming like a robot, that you know that okay, you have to wait and close. That's why you have your stop losses below you're out, because you know that what happens, and you'll be able to, and you saw it already, that if it closes below your entry, like how I showed you earlier here, it'll just dump. Same thing like here, it went below it, closed below it, it just kept on going down. Same thing here. This one closed below it. You see that? This here, little section right there, that section closed below this candle, and the next one came red. This candle closed below these two candles, and the next one came red. This candle engulfed these two candles, and the next one came red. See, remember the little pattern that we saw here? The same thing that I did it earlier. Look, see? Covered it, the next one came green. Covered it, the next one came green. This one, on the weekly, you saw sellers. Remember the same thing, the wick? Sellers, this one covered this candle. Expect the next one red. And then you can just keep going and going. Alright, you guys. Practice this. This is not really a lesson. It's just for you guys to see what the hell. Like, help you guys out more. So mostly psychology, I guess. But this is lesson 1. Before you learn all these charts and shit, you need to learn the candles. And that's what I look at, and that's how I know which stock is gonna bounce, or which one is showing buyers, which one are showing more sellers, which one might actually dump, and this will allow you to get patience. All right, you guys. So have a good night, and I'll do lesson 2 tomorrow.